Trading was halted in shares of Chinese realtor Cynic Holdings on Monday after its shares crashed 87% in Hong Kong. This is on a day when shares of China's second biggest realtor Evergrande plunged 11% on the same exchange, as investors feared a default in the Chinese real estate sector. China's central bank pumped $14 billion cash into market amid the Evergrande crisis. This cash pumping by the Chinese central bank came at a time when the trouble facing China's Evergrande group fuels investors' concern over the health of real estate and credit market in China. The collapse of Chinese real estate company Evergrande, with a staggering $300 billion of outstanding debt, could set off a chain reaction that could spread overseas. Some financial analysts fear that an Evergrande meltdown will have the same systematic risk on par of what Lehman Brothers' demise had on the US stock market. Like Lehman Brothers was in its heyday, Evergrande is massive, suggesting that a default would be felt widely. The company has 200,000 employees, raked in more than $110 billion in sales last year, and has more than 1,300 development projects going on across China. World's financial center, Wall Street, is keeping close tabs on the Evergrande situation, which highlights the extraordinary amount of borrowings Chinese companies and families had taken over the years. The collapse of Evergrande could affect China's economy, the second largest in the world after the United States, and a key catalyst for global growth. Evergrande has already suspended work on some projects in a bid to conserve cash. Given the company's huge size, this will put a huge pressure on China's real estate market. Property development has been a major growth engine for the Chinese economy over the last decades, and the lack of any new large-scale real estate development could slow the Chinese economy. But contrary to the popular opinion of the financial analysts, the Chinese economy may not experience a Lehman Brothers moment so soon, as the Chinese Communist government has enormous influence over what happens in Chinese economy, financial market and banking system. Consider China's recent crackdown on everything from video games to casinos to ride-hailing and ride-sharing taxis. The Chinese communists know pretty well as to when and how to grab the corporate neck.